So, ladies and gentlemen, what we did on Tuesday was we took the Harmonics scanner and we brought it back to the Vibrata. And so tonight, what I want to do is I want to do actually two things, okay? I want to do two things. And what that is I want to make sure that we're going to try to implement that. We talked about on Tuesday, we actually talked about how to, how to take that. And I brought up the buy stop and the buy stop, the sell stop, the buy limit and the sell limit. So we actually had all of those things, right? That's what we actually had. So tonight, what I want to be able to do is let's try to implement that. As I stated before, this actually might be a training that takes a while because I really want to help you all get in a position of profit, right? I really, really want to show you guys how to do that. But before we do that this evening, there is something that I do want to share with you. And I want to talk a little bit about the market psychology, okay? I want to talk about that just a little bit. And so, let me see. So I'm going to share my screen here where you guys can see what I see. And in understanding a little bit about market psychology. And the reason I'm showing you this is some of you all might have seen it before, and that's okay because it's always good. The same way we rehearse and we go over the strategy every morning, every day, every time we trade, make sure you guys understand the strategy. But what I want to show you right here is what I want to do is make sure that you all understand the psychology of the market. And the reason why we're talking about this right now is we do not move the market. We do not move the market, okay? On no level. What we do is we don't move the market. What we do is we just simply ride the wave of the market, okay? That's what we do. And in doing that, you have to understand that the market is emotional. Like today, for example, when we were trading this morning, everything lined up for a buy, and we had great reports from the news. Everything lined up for a buy, okay? It did for the US 30. However, right at the opening bell, the market dropped down. And why is that? Because the speaker gave a speech on impeachment. So remember, we do not move the market. But it's important for us to understand the technical. It's important for us to understand the fundamentals. So when you do your analysis. So what this means and what this simply is understanding that we can have absolutely no emotion. And that's why I wanted to bring this up today, because of how the market moves. And I'm consistently saying plug into the financial news sources. And so if I want you to plug into the financial news sources, what that means is you have to remove your emotions. So any news source that invokes emotion, which would be all of them, you do not want to be tied into that. You do not care about what's being reported. This is not about politics. It's not about any of that. What we're concerned about, because you made a decision. And what that decision is you made a decision that you're changing the dynamics of your legacy. You made a decision that you're shifting what you're doing in your household. So that means that you also have to shift what you feed yourself. And if you're going to benefit financially, you have to shift what you pour in, because what you pour in is what pours out. So we're literally changing the dynamics of our life. We're literally shifting our legacy and our families. So what that means is we have Brexit elections next week. Okay, so we talked about GBP pairs this morning and how they were rising with anticipations of what's been going on. We've been talking about how GBP has been in this zone since the announcement of the Brexit extension. So there are different things that we've looked at with the market, and I want you to understand how the psychology of the market plays into all of this, and how the psychology of the people who move the market, see, they're not concerned about you, they're concerned about their bottom line. And you have to be concerned about your bottom line. You have to be concerned about your pocketbook. And so with that being said, if you're concerned about what's going on in your household, then you just have to understand what moves the market. So even before we jump and we dive into merging these two tools together and bringing this over from there to helping us understand how to trade it, because we studied it for the past 2 weeks on Tuesday. So before we jump into the trades, I just felt this was very important because of the things that happened with the news source today. So if I'm looking at this, right, if I'm looking at it now, what you're seeing is this is the market structure. Okay, this is the market. That's what this is. So if I'm looking at the market, what you're seeing is this is disbelief. Okay, look at the structure of the market and how we react to things, and think about you while you're trading as well. Okay, I want you to think about you when you're trading. So when you're trading, you get that hope, right? The hope a recovery is possible. You get that optimism, okay? Then you get that belief, like that optimism, like, oh, this is real. Oh, is this trade still good to get into? Can I jump into this, right? So what about the belief, the time to get invested? Okay, no, this is going a direction I want it to go. Let me do this. So it's time to get invested. Now we got to tell everybody, right? Think about, I'm dropping it in the chat. I'm talking, right? We have to tell everybody about this. And then you reach this level of euphoria. Now, remember, this is your banks. This is your financial institutions. This is your insurance companies. This is anybody who has any impact on the market. So once again, you got the euphoria. We're all going to be rich, right? I'm good. This is what we are. And then you get that complacency. That complacency is nothing can happen, because we're complacent, even though you see a little drop, okay? And then it starts falling, or you start getting that pullback. This is going to turn around. What's going on? Why is this dip taking so long? Should I get out of this trade? What should I be doing? Think about you trading with this same emotion, right? But this is really what's happening on Wall Street. This is really what's happening in the city market. This is really what's happening all around the world. And then the denial. My investments, oh my goodness, that you're in denial. This is where the market's going to turn around. It's going to turn around. It's going to turn around. I didn't put my stop loss in, but it's going to turn around. Okay. This is what you're feeling right there. And then you get that panic, right? Right. I need to get out. So now you're like, what do I do? What do I do? And then you like, I can't lose any more money, right? I'm getting 100% out of the market. Now you're upset. Now you're mad. So the government let this happen. Who's in charge? It's the government's fault. And now, oh, wait, the market's in a depression. I've lost my entire retirement account. I've lost my retirement fund. I've lost everything, right? So that's how you're feeling right there, because of, what you're thinking. It's just that cycle, because you're leading and you're trading from an emotional standpoint. And when you're trading, you can have no emotions. Now, look at this disbelief. Now, what I want you to understand is, you see how disbelief is right here on the right. Now look over here. Look how it flips back to the left side of the sheet. So now we're on the left side of the sheet. Now you notice this is price, but this is time. So if this is time and I hit my disbelief again, what does that tell you? It tells you that it's going to happen again. It tells you that we're going to rise and fall with this again. It tells you that I'm going to continually go through these cycles, right? That's what I'm going to do. And if you look at this, what does this look like? It looks like impulse, correction, continuation, right? That's what this looks like from a trading standpoint. So this is the maximum point of your financial opportunity. So let me show you the big picture, okay? Let me show you the big picture. So This is, I put it on there, but this is that big picture. And once again, we're looking at this because I really want you to understand this. What happened today? The Speaker of the House, during the bet market open, all indicators said the US 30 should have shot up. All my fundamentals said the US 30 should have risen. That's what everything said. But because she spoke, now of course it came back and it's now activated. It's now activated for those of you who, based on your broker, it's now activated your trade that we put out there. But it took all day for that to happen, because at 9:30 Eastern Standard Time this morning, the Speaker of the House made a comment. She was speaking at the opening bell. So regardless of what my technical analysis said, regardless of what my charts told me, regardless of all of that, the fundamentals play a piece in that. So and then Brexit is, once again, the elections are next week. Those are the two biggest things that we've been following for a while, right? So now look at this. We do not want to be emotional. You do not want to be emotional about this at all. You want to understand how it moves. So this is 2017, okay? Now look at this currency pair. This is not even the US dollar. This is GBP JPY. But look at what happened. Look at this. So you got your disbelief, your hope, your optimism, belief, right? We're on this nice, now look how long it takes for us to rise. Look how long it takes for us to rise. And then look how hard we fall real fast. It falls really quickly. So this is happening. So this is 2017 right now. And then it says we're in depression, but actually, 2018 pushing into 19, 19 is almost over, but you have that disbelief. So that means that it's going to turn around and start coming up. Now think about it. Facebook is releasing a cryptocurrency, but he's not doing it till next year. Why do you think he's not doing it till next year? When you want to ride the wave of this up, when you want to ride the wave of this moving and going up, right? Instead of now where you got all this disbelief and all the stuff that's happening. So then let's look at this, GBP JPY. So now, right, this is the same currency pair, different time frame. So this one goes to 2012 up to 2018. But now look at this, the same currency pair. This is 2004 to 2008. Doesn't this look the same? Right? It looks exactly the same. The only difference is just has a steeper incline. So, but it's still that same chart, that same pattern, that same emotional pattern that the market goes through, because it's emotional. See those emotions? These are emotions. And so it's predictable. The market is very predictable. And so here I am again with these same emotions. Now I want you to think back to 2008. I really want you to think back to 2008. What happened in 2008? Bam, market crashed, right? This is when we had our housing crisis and everything else that happened. So, right, housing market issues, exactly. So that's when we had all of that. So with all of that being said, now, but look at how this started in 2004, and then all the way it peaked in 2007, in between 2007 and 8. So sometime in mid 2007. And how hard did it crash? It crashed really hard. So everybody's gearing up and making all these investments and making all these loans, and everybody's buying everything up, and all of this is happening. But the market is going to do what the market is going to do. The market is predictable. So look at how it came down. So once again, this didn't matter who the president was. This doesn't matter who's in charge. None of that matters. The market is cycling through the cycles that it takes. So this is another currency pair, right? A whole nother one. This is Euro and USD. Once again, this is 2017. Now I'm over here in 2019. So what's happening with this currency pair? Same thing. Doesn't this look exactly the same? You peak, you reach euphoria, disbelief, anxiety, and then, all of this is happening. I got my disbelief over here after my depression. So the market is doing exactly what the market's going to do. You ever ask yourself the question, why are my sales more profitable? Not that now that you know how to trade, because you are a master trader, you are the signal, all my trades end in profit. But when you do your analyzations now, instead of winging it, when you do your analyzations, What are you hitting more on? I'm hitting more on my sales. Why is that? Why am I selling more than I buy? Look at what the market's doing. Look at what the market's doing. It's in that decline and going and sliding off into that depression, right? So where is it at? That depression and disbelief. So it's coming out that depression, going into that disbelief. So this is what the market's doing. So look at this again, same currency pair. This is 2008 right here. Okay, from here to here, this is 2008. This is 2009 where we had a little peak. But what happened in 2008? I mean, this is literally July of 2008. This is October, right? So you look at how it crashed at the end of the year. So it took from 2007, 8, 2006 and 7 for this nice little incline. And in half a year, this currency pair dropped. It just shot down. So once again, what happened in 2008? The housing crash, the housing market. So the market's doing what it's supposed to do. It's predictable. So it didn't matter who is president. It didn't matter. What they do is they react. Okay? What they do is they react to the market. They react to the market. So because they react, you have to understand they react so you don't react. That's the point of why I wanted to share this with you tonight. Because today, and just today, over the last couple of days, we got GBP, right? Election next week. Today, the Speaker of the House, because of the impeachment, we were geared up for a buy. Why do you think you had a buy stop, right? Not a market execution. But we were geared up for a buy. We knew she was going to speak. So because she spoke, they react to the market the same way they reacted when the market crashed. And the reaction was government bailouts, right? The reaction was getting the housing market back on track. The reaction was saving the auto industry. That was the reaction back then. And I'm using that as an example because that's something everybody knows about. So businesses react. They're very emotional. You look at what's happening right now, you can't even get on social media without everyone commenting and giving their side and their opinion. You are in a financial market. You do not get emotional. And that's what I want to share with you. No emotions in trading. No emotions. You just have to be able to sit back and say, okay, I know she's speaking. So I need to be mindful of what that can do to the market. So what can that do to my trades? What can that do to my profitability? How does this impact my trade account? Because I care about my bottom line for my household, right? That's what I care about, not the reaction of the fight that everyone is in politically. No, you care about your bottom line. So no emotions in trading. The people who move the market are very emotional. You're not emotional. And that's the standpoint I want to get you to, is where when you see the charts and you hear the financial news, when I say cut on Bloomberg, cut on Bloomberg, cut off MSNBC, cut off CNN, cut off Fox, cut off all of those news stations, because those people have a job, and that job is to invoke emotion. That job is to reel you in, and that's not going to help your trade account. When you're trading, you need to be able to understand and set your parameters. When you're trading, you need to be able to understand why the strategy works. Matter of fact, this on here, let me share this with you. So I definitely want to see, this is the analysis, the technical, the fundamental, and the sentiment. So when we mark our charts up, when we look at everything, we're looking at it from a technical analysis, a technical standpoint, just like we did today. We're looking at it from a technical, do my blue line cross over the red? Am I in a trend? What are my candles? Do I have a flat bottom, a flat top? What's happening? Did my PSR flip? Do I have my market structure? What am I looking at with price action? Do I have my harmonics? Is that giving me a reversal? What is it telling me? That's how you trade. That's what you analyze. Then you come back to your fundamental. The fundamentals are, right, tomorrow is the first Friday of the month. What happens on the first Friday of every month? Non-farmer payroll. So how is that going to impact the movement of the market? What is that report going to tell me? So that report, if it's good, everything's going to shoot up. If the report's bad, it's going to shoot down. Okay, what does that report tell me? Then the sentiment, how they feel about the market. How do they feel about the market? So remember, they're there for their bottom line, and they're reacting because they're business owners, or they're reacting because businesses are making decisions and things are moving. What about the US and China trade wars? Okay, talks are going great, market going up. No, we don't want to do this, we'll wait till after election, market goes down. Okay, how do people and businesses feel? Your job is to have no emotions. That's your job, so you can increase your bottom line. So now, I'm not going through all of this, but what I want to share with you is this is why the BYOB cash out works so well. Now, what you're looking at is when I tell you about areas of value, you have what's called entry triggers. What the Vibrata does is it triggers, it finds those entry triggers, it gives you those entry triggers. So you find those entry triggers. So you want to make sure that you definitely looking for those entry triggers. But with those entry triggers, what you have to do is understand you got areas of value: support and resistance, moving average, and trend line. Now, let's think about the BYOB cash out for just a moment. Let's think about that for just a moment. In my stochastic, I have my moving average, and that's a leading indicator. In my stochastic, I have my moving average, and that's a leading indicator. My Hikinashi candles are my trend, okay? My Hikinashi candles are my trend. And then my support and resistance is my PSAR. So I only need one area of value, and only one, in order to trade successfully. Only one to help me identify my entry trigger, and you can have a successful trade. But to increase your accuracy, you have all those areas of value. See, support and resistance, what does this look like? Price action, right? So just imagine my PSAR moving with it. So if I was doing price action, you think about this. I'd be looking at this for a shooting star. You looking at these tweezer tops, right? Support and resistance that's moving with it. You know that it's going to test it. Oh, here's a test. There's a test. But do you know if it's going to push through? What's it going to do? You don't know. You're reading the Japanese candles. That's what you have to do in order to try to figure it out. Here is a moving average line, right? But I also have a trend, right? Impulse correction, continuation, correction, continuation. So that's trend continuation. This would be considered an entry trigger. This would be considered an entry trigger. This would be considered an entry trigger, and so with this one. But because I know I'm on a downtrend, right, you would only, look what you would only be trading. You'd only be trading at these entry triggers. So I'm just running through this to kind of give you an idea. Right now, this happens to be that uptrend. So this is just to kind of give you that big picture and that idea of why this works, because this is what you're taught. You go through the academy. This is what you learn. This is what you need to understand. But what all we did is help you understand how you can, in turn, just turn around and maximize this to increase your profitability and everything else. So if I'm looking at this, you see I got support and resistance, but I also have a trend. So now I have two of them combined. I got two areas of value combined. But even within that area of value, I'm still looking for those entry triggers. The Vibrata does that for you. The Vibrata gives you those entry triggers. That's what the Vibrata does. So you and it helps maximize those entry triggers, and it's gonna actually put you in a position of profit. So before I move on to show you half of the things that we're supposed to talk about tonight, I declare I am an emotionally balanced master trader. I respond accordingly. I don't react. Oh, I like these affirmations, right? I love these affirmations. You got to be able to walk in that. So with this being said, if you give me a 555 in the chat, if you're with me, if you got a question, drop it in the chat. But I want to make sure that you are, like the affirmation just said, emotionally balanced trader. We do not respond emotionally, okay? Very, very important that you are emotionally balanced and you're not responding emotionally, because you just like today, what happened? And I want to make sure you guys are trading from a standpoint of you put your stop loss in, okay? You make sure you put that stop loss in, because that stop loss is going to help you, and you're using the proper account balance, you're using the proper lot sizes, you're using you're building your account the right way. And I'll say this and I'll say it again. I'll say it all the time because I heard it too many times when I began my journey. Oh, everybody's going to blow their account. Absolutely not. We want to make sure you understand the big picture. If you're given all the tools from the beginning, you're given the correct mindset from the beginning, it's absolutely no reason why you should blow your account or do anything like that. I want you with the right mindset. I want you speaking life over your accounts. I want you speaking life over your trades. It's not something you have to do. When you open your checking account, nobody told you bounce checks everywhere. Nobody told you that. What they did, now see, I might be aging myself a little bit because y'all just swiping now, but nobody told you that you be bouncing checks all over town. What nobody said, oh yeah, you're definitely going to blow that account. What they told you was balance it out. Make sure you take your checkbook and you do your ledger. What they told you was make sure you wait for that check to clear. What they told you was to do it properly. And if you followed those financial responsibilities, if you followed that financially right, now you would be okay. If you accounted for your fees, you accounted for everything, you would be okay financially with your trade account. Okay. So with your checking account, and the trade account works the exact same way. It definitely works the exact same way. So just kind of want to highlight that and point that out as we begin. And now we're going to go look at what we did on Tuesday. Definitely going to go look at what we did on Tuesday so we could begin this journey. So let me change this, adjust my screen share, make sure I get this pulled up. So do I have any questions about any of that? Let's see here. It's not sharing yet. 1 second. I'm going to try it again. Guess I had to finish pulling up. You guys should see my screen share now. Awesome, awesome, awesome. So once again, this is definitely the Harmonics scanner, right? That's what this is. So what we did, just to recap, now what I didn't ask in the beginning, and I definitely want to know, if this is your first time on the call with us, let me get a 111 in the chat. If this is the first time on the call, let me get a 111. If you have been on a call with us before, but you've been on the call with us before, let me get a 222. And can everybody make sure you keep your microphone muted? Let's keep the integrity of the call. I appreciate it. Okay. So awesome, awesome. So welcome back, everybody. Welcome back. And for those of you all that dropped the 111 in the chat, I want to welcome you to the BYOB Cash Out. And just so you understand, on Tuesday and Thursday nights, we do training. Thursday nights, we do trading and training. And on Monday through Friday, I'm sorry, not Friday. No, not in the morning. On Monday through Thursday at 5 a.m. and 9 a.m. Eastern Standard Time on the same link that you're on right now. We're live in the market trading. So that's what we're doing. And this is your training, because BYOB 1 million families financially educated and impacted by the 28th of March, 2021. That 1 million families begins with you. So it is very important, very, very important to me, very important to Mr. Rogers, very important to Dr. Bythewood, very important to the entire BYOB family, that you all definitely understand how to be effective traders. You are the trader. You are the signal. That is who you are. So what we did on Tuesday is we actually started looking at the Harmonics scanner. And I want to reiterate that this is just where you can get your harmonic patterns, okay? We're not trading off of the Harmonics scanner, not at all. This does not give me the indicators, the candles. It does not give me anything that I'm looking for. these support, these take profits, this stop loss, all of this is strictly just your support and resistance lines. That's all this is. So what we're gonna do tonight is we're gonna grab some of these examples and we're gonna go back to the Vibrata and we're gonna show you how this works. We brought up and we talked about your buy stop. See, so we've been doing market execution. When we're on the calls, we're doing market execution. But this should allow you to be able to do a buy limit, sell limit, buy stop, sell stop. It should allow you to build your accounts, to set your different take profits. So I just want to make sure that you guys understand when you're getting signals from all over the place, this is really where they're coming from. This is what is being used. So once again, you are the signal. You are a master trader. You are your trades in profit. The only way you're going to be financially free and not financially dependent is you becoming that signal. You becoming that person. Okay, so let's see. So I'm back with you. I'm back with you. So what we're looking at is now these brokers along the side. We got brokers that run along the side. Is 1, 2, 3, 4, 5, 6, 7 different brokers. I have no preference. Okay, you're just looking. You just want to come in here, grab a currency. The ones on the top, of course. You see, you got your 15-minute chart, and you have your hour, 4-hour, and daily. If you're a swing trader, intraday trader, this is what you want to be looking at, right? That's what you want to be looking at. If you are just kind of looking for like take profit 1, take profit 2 kind of thing, this, you want that 15-minute chart. Where do we typically trade it from? So guess what? We're pretty much going to pull our trades from. It's going to be this take profit is going to be the 15-minute. But if you are a swing trader, you are anything like that, then of course you could look at those higher time frames. So let's take this one. This is Euro USD. Okay, Euro USD. And let me see here, Euro USD. And what you want to do is we are definitely going to take this and we're going to go back to the Vibrata. It's coming. Work with me. Work with me. Now, of course, if you have any questions, comments, concerns, anything while we're going through this, please ask the question. When we pull this up, I'm definitely, especially for you all that said you're a 111, but really for everybody, we're going to go over the strategy and I'm going to help you understand how to trade the strategy. Now, I'm going to, now for the sake of, for the sake of helping you guys see the big picture, I'm going to drop these lines on here where they had them, okay, which are support and resistance lines. So obviously I'm looking for a sale set up very soon. So I'm on the 15-minute chart. I'm trading off the 15-minute chart, okay? 11096 is where that was at. So gonna put that one there, and that one is what they indicated as a stop loss, right? Take a little time with you guys tonight. Okay, that's what was indicated as a stop loss. Gonna come back here, get an entry point, 1.11087. Uh-oh, what did I do? 009 0. So it's very close, right? It's, you see how close it is on here? but it doesn't look that close on here. But it's really just 1 pip, right? See, because that last one is the pipette. So that's why it looks like that. It doesn't look that close on there, but it looks closer on here. But that's why it looks like that. We're going to talk about that in just a minute. So you got 2 different entry points. 2 different entry points. So look at how those both of those are entry points. What do I do with my, okay, this one is supposed to be the stop loss. And I'll probably come back and change the color of the entry points in just a minute, because I want everybody to be able to see. Now I'm doing this for the sake of training. I draw my own support and resistance lines, right? I'm going to make my own support and resistance lines, but I want you all to see, right? I really just want you guys to see. One, 1, 0, 5, 1. Okay. So all of these are different take profits, and this is, of course, on this 15-minute chart. So you see that you're getting a fraction. You're getting a fraction of what was happening. So you see how much further take profit 3 is. So I'm going to change the color of this just so we can, you know, you guys can see all of this. I'm just changing the color of it just so you can see these are your actual entry points. So what is that telling me? Okay. What's this telling me? So what you're really looking at is a fraction of that. And it went away. Let me see. Not what we were looking for. I still, okay, here we go. So you notice we're just looking at a small fraction of what we were looking at right here. See, I got the whole thing pulled up initially. What we're looking at, we're normally looking, oh, that's a nice uptrend. But what it identifies, right? So you guys can see what it's identifying in here is that harmonic pattern, okay? It's identifying that harmonic pattern. And so when you're looking here, you're seeing a harmonic pattern. And when you see this harmonic pattern, if your eyes don't see it, you notice that, let me kind of show you, that we had a nice uptrend, okay? We had a nice uptrend. And in this uptrend, I have my impulse, correction, continuation. You see my trend where I'm going up, I'm coming back, I'm going up. This is what the Academy is going to teach you is, right, the trend, and the trend is my friend. But when you start, when that market starts talking to you and you start seeing the market in the big picture, you start noticing, okay, I had my uptrend, so I did have a higher high, but my low really didn't get low. And then this kind of went back up. So what is that? That's a harmonic pattern. That's what this is. That's that harmonic pattern. And so because as we talk about, even with trading the BYOB cash out, part of what we talk about is understanding that everybody doesn't see the same thing. That's why we added the time frame confluence. That's why time frame confluence is so important to what we do, right? Very, very important. So, and like I said, we're going to talk about that before we even talk about taking this trade, is how to trade the strategy, because I want you to see how that strategy is going to help you understand when to get in the market, when to get out the market, you know, what am I doing as far as that's concerned. Now, one thing I do want you to understand as well, this was indicated as your stop loss. I'm going to work these lines down. This was indicated as a stop loss. No, it's not your stop loss. Your stop loss is never on a support and resistance line. So I'm going to go to the higher time frame just so I can kind of help identify these support and resistance lines, because that's why I said I always make my own. You see, I make my own. This one has just been kind of high. But when I make my own support and resistance lines, you want to change this to a line chart. When you change it to a line chart, you can see those points, right? I can see those points. Now, I probably need to make it a lot wider because of how close it is, but you can actually see where those touches are. So because I know that, if you know anything about price action, you know anything about where I put my stop loss, you know anything about that, then you know that when you touch a support, it's going to touch, just like I showed you in those slides just now. It touches those support and resistance lines. So my stop loss, I do not want on a support and resistance line. I do not want it on a line. I want it above the line, okay? I definitely want it above the line. I never want it on the line. If I drop down to my 15-minute chart, I was on my hour because I draw mine on that higher time frame. And then I come back and get my dramatic, my dynamic dramatic ones, where the ones that you'll catch in between there. And you can kind of see them just a little bit. But you do not, I cannot stress that enough. Just like we put it above or below the PSAR, you're going to do the exact same thing. It's going to go above or below. So you want to treat it the same way. If I change this back to Hikanashi candles, now, of course, if you guys got a question while we're going through this, make sure you ask. And it shouldn't have moved that far just for me changing my candles. Now, you see how I got my candles? Look where it stops. Look at how it's testing that line. Look at how it's touching on that line. So I do not want it on that line. So I just kind of went back there to show you exactly what I was talking about. So I'm going to bring this back to where we should be trading at. And did I go too far? No, I should be in December. Here we go. I was like, where is everything at? It should come back up, right? It's coming. Here we go. This one so here we have it. So you're looking at this. So once again, now what this is doing is giving me 2 entry points. So I know for a fact that my entry point is definitely not this first one. I want to go for the second one. You see, I'm still rising. I'm still going up. So you want to give it an opportunity to go up and turn back around. So this actually would be your entry point here. So if you're doing this, this would be a sell limit, okay? Sell limit. And it would be a sell limit because remember, a sell limit means that the market, let me find it. What am I looking for? I know what I'm looking for. I need you guys to be able to see. So a sell limit, of course, I'm not going to find it because I'm looking for it. I'm looking for this arrow. Here it is. So a sell limit means I have every expectation for it to go up. And then when it finishes going up, it's going to turn around and come back down. That's what a sell limit is. So I want to sell, but I needed to finish buying first. Okay. I want to sell, but I needed to finish buying first. So you don't want to just enter a sell, because if I enter a sell, now I got all this pullback and then I got to turn around and wait. So my sell limit would be here at this purple line, at the first entry point. That would be my sell limit. Okay. Because you wanted to go up and you wanted to turn around and come back down. So that's what a sell limit is. So, and now what if it kept going up? Then guess what? I never entered a trade. So, because if you notice, sometimes you go to the harmonic scanner, you look at something and come back later and I look and it's gone. It's no longer there. Because yes, it formed a harmonic pattern, but it never activated. The market decided to do something different. And, that's what the market did. So it will go up, and then it'll turn around. And so the trade will not activate until you are actually here. So understand that. Just make sure you understand it's not going to activate then. So this is when it will activate. So that's what a sell limit is. Now, as far as your take profits, if you have a small account balance, right, the same way I want you to go back and look at that compounding sheet. And if you missed it, go back and watch Tuesday's training, because we went in detail over that compounding sheet. It's uploaded. It's on a YouTube channel. Go watch it. It's already there. Okay. So it depends on the market. I can't tell you that. When a harmonic pattern, the question is how far will it go up before it remove it? I mean, you look at this, some of them are here. We are in, some of them are here. Let's just say, look how long they'll stay there. So look how long. So it's still there because this one actually executed. And it took profit. It went all the way to take profit 3. It bounced back up. But I mean, look how long ago that harmonic, it hadn't had another harmonic pattern since then. But it's still there. But so, wait. So you just want to keep that in mind. So what I mean is, if the harmonic pattern doesn't execute a trade, it'll go away. So I really can't answer how far or how much. You don't want to place a sell limit until it goes above price. And then, no, if you do that, if you wait to place a sell limit until it actually goes up and then comes back down, you might as well do a market execution. A sell limit is so I don't have to sit there and watch it. A sell limit is so I can actually walk away and I can move away and I'm not sitting in front of the computer. That's what a sell limit is. As I see something, I know it's gonna have, I'm gonna have a setup and I can actually set this in place. And now if it does not work out, guess what? The trade doesn't activate. So let's say it keeps buying. It completely disregards my sell limit. It completely disregards it. It'll keep buying. Guess what? It never executed. It never turned around. It never came down and executed my trade. But when it does, of course, you want to adjust it to what we're looking at. So, and then let's take a look at this. Let's look at the BYOB cash out with this. Okay, let's look at the BYOB cash out. How do you even know if it's coming or what it's doing? Look at my stochastic. Okay, my stochastic is starting to get that curve. So before I even go into that, let me help everybody understand what the BYOB cash out is. So I'm gonna look at this buy because this was a valid buy set up before that. So what the BYOB cash out is you're using 3 indicators. You're using 3 confirmations, 3 indicators. And that's the stochastic, which measures the momentum. We just went over what they do in the slides that I showed you a minute ago. So you got the stochastic, you got the green candles with a flat bottom, and I got my PSR on the bottom. All of that's for a buy. So for a buy, I got a stochastic flipping up from the bottom. I got a green candle with a flat bottom. See how that's on the bottom? And PSR is on the bottom. So I got all 3 lining up for a buy. For a sell, stochastic at the top, blue line cross over the red candle flat top, and then my PSR activated right over here. Now I want you to notice something on this sell. When does my PSR flip? My PSR actually flips when my red candle is pushing through this support line. Okay, it started up here. We got flat candles, and then you get, why do I gotta wait on the PSR? Do I really need the PSR? Yes, absolutely. Because when it pushes through, the support line is when you really probably are going to get that PSR. I mean, that's, you know, to get that PSR that flips to the top to go along with that. Same thing over here at the bottom, right? When does it push through? Look right here. I got my Hikinashi candle, flat bottom. PSR flips to the bottom. You know, every candle, you see every candle actually has a PSR with it. When it flips to the bottom, look what happens. I got my flat bottom. I got my PSR on the bottom, but where am I at? I'm at a resistance line. So that's when it's pushing through. All indicators are important. Now you see the correlation of your areas of value from the slides to now you actually see it on the chart as a setup. So you actually have all 3 indicators. I got everything right here. Now what time? Now let me add some time frame confluence, okay? Let me add some time frame confluence. So I'm gonna drop this arrow right here to kind of show you. Where does my stop loss go? My stop loss is below the PSR. My stop loss is above the PSR. That's where it's at, okay? That's where it's at. Now, the other thing that I'm doing, right? The other thing that I'm looking at is I want to, so you see, I have this, so I want to drop down to the 5-minute chart. When I drop down to the 5-minute chart, it's not about how many pips above or below. It's about your comfortability level, right? It's all about your comfort. It's all about you. So it can't touch it. Just don't let it touch it. Some people cushion theirs a little bit more than others, you know, but it's all about your comfort. When I go down to the 5-minute chart, it needs to still be buying. It needs to be buying. You're very welcome. It needs to be buying because I'm looking for a buy. So if this started selling, then I don't want to enter the trade. Right? It happens on a 5-minute chart first. Happens on a 5-minute chart first. When I go to the hour time frame, let me find that arrow again. I love how my charts like to move. So when I go to that hour, it needs to be looking like it's going into a buy because I'm buying. So it needs to look like it's going into a buy. Well, guess what? It's definitely a buy. This one is a really good setup. It's a really nice setup, right? It's really nice. So I know I'm going to get my pips out of this. So that tells you I can grab my 10 pips and cash out. If you're learning the strategy, please give me your 10 pips and cash out. right? On this call, we're going to talk to everybody, the ones who dropped the 111, the ones who drop a 222, and the ones who want to drop a 333, right? Saying, hey, we're cashing out on our own. We're doing this. I'm identifying trades. Those are the individuals that are really looking for more than the 10 pips or past the take profit one. If you are just learning and beginning, your take profit is take profit one. Okay? Take profit one. Take profit one. So to take profits, honestly, is nothing more than your support and resistance lines. That's it. That's what they are. They are your support and resistance lines. So you notice I came up for a buy. We put in a sell limit because look where I'm at. So my sell limit is this one. This will be my sell limit. Okay? I don't even like the purple color, to be honest with you. Give you something that you can see a little better. So that's actually your sell limit, okay? Your sell limit is there. So now you set that, but for the purpose of understanding the BYOB cash out, right? The stochastic is beginning to curve. So we know it's a beginning to make a change. So this is going to help you determine, even if you want to set it, will I put this on my watch list? So it's beginning to get that curve in it. That's what it's starting to do. It's getting that curve. So, I got my accent. So it's starting to get that curve. So now you looking at the candles are still moving up. Look how far this PSAR is from this candle. What has to happen, if you have not noticed, that when does a PSAR flip? It actually touches the candles. It touches the candles, it flips to the bottom, right? It's at the bottom, it touches the candles. When it reaches the candles, it flips to the top, right? So it's always touches the candles before it flips. So if I know that to be true, I still have a little bit to go before it touches those candles and it flips. So you see how the PSAR was moving slowly and now it's starting to get that rise and it's coming up. So it's gonna eventually touch these candles in a little bit. So that's gonna help you identify as well. Do I want my take profit one or my take profit two? Because ultimately, now if you're looking at this and you want to do a market execution and practice these first, you might actually not even do an entry point until here. And that's because I want my indicators lined up. I want my stochastic. I need my red candle with a flat top. And I need that PSAR flip. Very possible. You notice when it's coming up and then it flips, right? But it also, it's flipped too in a trade. So it definitely has flipped too. Like, look at how this is still going up. But even in the up, you got a correction right here, and that PSAR did flip. But it's still, if you would have gotten to this trade down here, my stop loss would have been down here. I was going up, and I had that little pullback. So the PSAR happened to flip on my pullback, and then it flipped back to continue my buy. So this one happened, the corrections actually flipped the PSAR. But that doesn't necessarily mean jump out, because look how high it rose up. You could have, this update, hold on. I got to figure out how to make sure I don't click it away since they updated it. So, I mean, that's still 18 pips right there. That's 18 pips that you could have got. And even going up, that's another, watch it go away. See? Nice little update. Look at that. So you got, that's 20 pips, 22 pips that it went up. But I still had pullback and correction in there. So just so you can kind of see that. So there you have that. So, but you notice that it'll come around. So basically what this is doing, now if I come over here and I got the Euro USD over here as well, it's golden, because this identifies harmonic patterns, right? It's really not identifying anything else, because all harmonic patterns don't mean the market's about to turn around. If you've ever just tried to trade off the harmonic scanner, it's hit or miss. So, and it's hit or miss because it's not a standalone tool. Understand that this is not meant to be a standalone tool. But I come back over here, and when I get back over here, okay, the BYOB cash out, which is, see the strategy, BYOB cash out. This I just gave you why it's so accurate. Why does it work? You're actually working with all three areas of value. So the only thing you're really using this harmonic scanner for is to help you identify, because your eyes might not see this harmonic pattern. They might not be there yet. So as you're learning, and say, oh, it's okay, there's a harmonic pattern, it's a potential for a trade setup. But what the Vibrata does is it scans the market and it gives you those entry triggers. And then you have to just determine, is that an entry trigger that I want to take? Is that an entry trigger that I want to work with? Is that an entry trigger that I want to deal with? And that's what that does. So here you go. I mean, you got a really good setup here. So at least tonight, you got a possible trade we just went through. So put it on your watch list, go watch it, and then you take profits. Like I say, you go back to that compounding sheet. Go back to that sheet and understand, because from here to here, that's no pips. Come on now. They gave us no pips. We don't want that one. Now, on this one, you're going for the, you want all of it. So, yeah, we want. So on this one, it really just gave you 6 pips. If you go all the way to take profit 3, it really just gave you. Let me go to the other entry point. We picked one that had now 7 pips. Now, remember I told you liquidity and volatility in the market. Maybe we should have went and grabbed one of those GBP pairs, right? But liquidity and volatility in the market. You see that? Now, if we would have grabbed something else, so we grabbed something else. Not that one though. Grab something else, that same amount of movement, that's 35 pips right there. So it's all about the liquidity in the currency pair. It's all about the liquidity in the movement in the currency pair. So what's the question? Does the lot size has any effect on the number of pips you can grab? No, it does not. The lot size has absolutely nothing to do with the pips. Your pips are pips. The pips is basically the movement in the market. The pips are the movement, right? That's what they are. But the lot size is the value you place on the pip. So in the academy, they have the 2 videos that will explain that in detail, but then also to help you understand what your lot size should be, go back to Tuesday's training that I uploaded from Tuesday on the BYOB Challenge YouTube channel. And I go in detail and help you understand what your lot size should be, so you have a good understanding, and using that compounding sheet that's in the Facebook group, BYOBCashout Facebook group, to help you understand what the lot size should be. So before we close out this card, do anything else? Oh, thank you so much. Thank you so much. God bless you too. Mr. Rogers, do you have any comments or